welcome Jodi again to the show. Jodi, following on from Sarah's insights into the research, can you start us off by sharing briefly the direct impacts of COVID-19 on trustee companies from the perspective of equity, and also share the impacts that you're seeing on the hundreds of trusts and foundations managed there at Equity Trustees?
Yeah, thanks Julia, and thanks Sarah. So in our experience, COVID-19 has had a massive impact for Equity Trustees, and I think it's fair to say that it's been an exhausting 6 months for the sector, and it's also been an exhausting 6 months working alongside the sector. So, and look, the team and I know that firsthand because of the hundreds of phone calls and conversations that we've had with the sector pretty much from January this year, that it's bloody tough out there. And so I think what's critical for us as a funder in order to remain relevant and impactful in our giving is that we've managed to change our approach this year, and we've adopted both agility and speed, and really had to do that to be there as things change for the sector, to be able to continue to offer the levels of support that we have. So you can imagine for a company that's got a long history like ours, that's been fairly challenging, and having those hundreds of trusts and foundations has made it just, you know, quite a big thing for us to get through. So primarily though, there are really two key impacts for us, and firstly it's meant that we've had to change the way that we support the sector. So EQT have prided themselves over the years in being able to make a lot of large-scale multi-year commitments wherever possible in the past, and we've now have to understand and project what the impacts of the pandemic are going to have on our future giving in order to make sure that we can really honour those commitments into the future. So what that's meant is initially that we've had to prioritise our long-term partners and really have a good look across our portfolio at those multi-year funding arrangements, because a lot of our partners have planned these funds into their financial projections for the next couple of years, and we really need to make sure we're in a position to honour those. Because due to the large number of granting relationships that we have right across the country, it was just a massive piece of work to analyse and really get our heads around what that meant for each of us, and also just to engage with our partners and have a conversation and to reassure them. So in addition to that, we've also been having our short-term lens put on, which is working in the sector right now with what are the acute needs and what are the requests and for help and for funds that we're getting from basically as a result of the pandemic. So in a really short space of time, we've really had to adapt our traditional approach to funding and sort of think about how we could redeploy those dollars differently in order to meet that sort of urgent short-term need. So the immediate trends that we've been getting in terms of requests for funding, we've been seeing a much greater volume of smaller, one-off, untied funds for core funding, and that's pretty much it coming from the sector. So we've just completed our first tranche of emergency funding, and it's been in a more streamlined and rapid response way than what we've ever done before. And it's been really interesting, but we have just learned so much through that process.
Yeah, absolutely.
So, well, sorry, go ahead.
No, you're right. No. Are you still going, Lovey?
So no, I was just going to add to that. Obviously, the second impact that we've been feeling is having to navigate, you know, and understand really what the financial impact is going to be on our ability to give moving forward through our charitable income. And Sarah touched on some of this already, but you know, as we all know, that the last quarter of this financial year has been, you know, the financial markets have been hugely impacted, and we are, you know, anticipating that there could be negative impacts that continue for the next 12 to 18 months. So, you know, in the short term, we are going to have less money to give. So because of the fact that we've been historically so lucky to have that year-on-year growth of our corpuses, but the majority of our trust's assets are actually invested in the stock market. So, you know, this is an unusual time for us and an unusual situation for us to be in. So unfortunately, a lot of our trusts, or the vast majority of them, don't have that access to capital that Sarah mentioned earlier, and we don't have that opportunity to supplement our drop in income. So the question that everybody's been asking is, how much will income drop by? So without a crystal ball, that's a really just an impossible question to answer, but we're probably working on anticipating that things could drop by between a range of 30 to 40% in terms of off the back of the high levels of income from FY19. But this is a moving feast, and we are in such a volatile market, and we're going to be monitoring things extremely closely. And we are really hoping that this won't be such a significant drop, but it really is dependent on the pace of recovery of the economy moving forward.
Yeah, fantastic. Excellent. You just touched on something just then about the Lifeline grants that you've been able to distribute the last couple of months. I wonder if you can just take us a little bit deeper now, looking at those Lifeline grants that you've been able to provide, and just give us a little bit more of an understanding of what they have been. And then also sharing, what happens next? What are you preparing for next? And you've touched on that a little bit in terms of the analysis of the data, but what are you seeing in terms of the next stage of, I guess, grant making style that might start to come in?
Yeah, thanks. Look, we've been really pleased over the last couple of months to have been able to make $2.7 million in COVID-19 related grants to approximately 70 different organisations. So the grants that we've made have really been for very practical things. So a lot of requests that we've had for funding have been for technology solutions, whether that's getting organisations back into remote working or whether it's getting their service delivery model repositioned, right through to sort of complex medical trials, a lot of equipment requests as a direct result of the pandemic, and then just simply core funding. So we have so many great sector partners who've experienced a sharp increase in demand for their services, and it really has just been a lifeline to help them, give them a little bit of help through this period. So beyond the short-term grants, we've really been working with our existing grantees as much as possible, just to give them the flexibility that Sarah talked about. So really obvious things, extending timelines, being more flexible in our application process, saving everybody time and red tape, and just where possible, we've been working with either our clients or our co-trustees to make sure that where people have been allocated program funding, that where they've needed it, they've been able to transfer that across into core funding for operations. So we put all of this on our website, and we're just doing as much as we can to free up as much capital and as quickly as possible, as much funding to really get it out there in this time of need. So it doesn't mean that we're not sticking to our areas of focus and funding organisations who are less impacted by the pandemic and bushfires, because quite simply we have been. So it's just really meant that we've had to deepen our level of engagement with our clients. We've really needed to understand how they're faring, who needed what level of support and when. And it just has meant having more open and honest discussions and talking to some of the queries that are coming back to us from our partners that are causing stress. So it's not an easy time for anyone to navigate. And the most important thing that we as a funder, I think, can do is listen to the needs of the sector and approach these conversations with openness and honesty as things change and develop, which they're going to continue to do. And it's also useful to help our partners to understand the parameters that we're working in and share the insights that we have from the donors that we work with as well, and to reciprocate that open communication line. So, flexibility is critical, and what we've experienced to now, though, may not be the response that we need to be delivering in the next 6 months. So we need to be open-minded about what the sector needs moving forward. So next week, it's the new financial year, and we're really, really focused on learning from our experience. As I said, we've gotten some great insight that we wouldn't have had otherwise. And we just want to really be the best funder that we possibly can. And that involves listening. It involves having online, open discussion. And we're hoping to have an online discussion with a whole range of different partners of ours to make sure that we are actively listening to any changes that we may be factoring into our approach in funding moving forward. So, it's really the same answer that many people are having, and that the sector is having to deal with: flexibility, adaptability, and working together as a team to get through this.
Yeah, fantastic. Excellent.